Hello, everybody. Welcome to Tuesday. The S&P 500 was up 1.1% today. Actually, a little surprising. The CPI report, the inflation report, came out, was higher than expected. So normally you'd think the market should be down, but according to Bloomberg, there was kind of some rumors that the CPI report, the inflation report, would come out even higher. Kind of a hot report. And so once that didn't happen, the market kind of like a relief rally and had a little run here. Nvidia was up 7% today, and all these things. You can see how much money is sitting on the sidelines. You also can see the market really does care about these reports, especially this year. Lots of kind of waiting or dropping a little bit before the report comes out. Some volatility around the reports. And I think part of that is just because, the readings have been a little bit higher than expected. So there's some concern, hey, is this restarting inflation or what have you? But you have to remember that the market has an institutional memory here that remembers the 1970s. I wasn't, an investor at that point in time, but I know a lot about it. We read about it, we know about it, and so the Federal Reserve had inflation, under control. They thought the labor market started to soften up a little bit. We're seeing a little bit of that now. Unemployment's up to 3.9%, still low, but if that continues, the Fed has a mandate to try to get full employment, which is 4% or less. And so they started to lower rates back in the 70s, and then inflation just got out of control, and they had to do it a devastating amount of rate increases, all the way up to 19% on the Fed funds rate. We're at 5.5, 5.25 right now, so that's a huge differential, and so we're in that kind of similar time zone. This is the highest inflation we've had since then. We've raised rates a lot. Inflation's coming down. The Fed is talking more about lowering rates. Do we end up with another run like that? So that's why there's so much attention paid right now to these inflation reports. And it's been my biggest fear. And I've said this even, more than a year ago when everybody was talking about recession. I was really more afraid of the reigniting inflation. And that would put this market, stop this rally that we're having. But I think the rally has a lot of power behind it. You can see it. Even though the market's stretched, it should be coming down. Really, when it gets this stretched out, it should be at least going sideways. It's not really happening. If you go back to the 1995 chart, the S&P 500, look at it on a weekly database basis, it's pretty smooth. Really, market was stretched out then too, but it kept going really all year long. So it can happen. I mean, there's definitely, periods of time where the market is stretched out and still goes, although it gets a little harder, just because, there's a lot of buyers that have already bought and, end up with more sellers left over. So, however, you can just see the power. I mean, the market drops and boom, here we are, a new all-time high today, even after an inflation report that's a little bit hot. People are just worried that it could have been really bad, and the Fed might really be waiting even longer to lower rates, that kind of thing. So anyway, that's what's happening today. Very interesting day, a nice day for returns, and look forward to seeing what's going to happen tomorrow. We'll talk to you then. Thank you.